Okay. Hello, everybody. So we're celebrating about 10 years in the crypto business. How do I get my slide back? Okay, here we go. Gotcha. So we're celebrating about 10 years as a securities business that have been supporting the crypto industry. And I normally give a talk, and 15 minutes is going to be very challenging for me. So I'm going to try and do three things in this presentation. In 5 minutes, I'd like to share with you a decade of experience being involved in crypto securities. The second thing I'd like to do is give you some trends that I think are going to happen over the next decade in crypto securities. And then finally, I'd like to tell you about some new products and some new things that we've been working on from everything that we've learned from the last 10 years in crypto securities. So, first thing, a decade in crypto securities. I'm going to try and get this one out in 5 minutes. If you haven't heard of banktothefuture.com, here's our portfolio in 2020. We've been around funding many of the companies that made our industry today. And here's some of our portfolio companies and about 120 other funding rounds that we've done over the last decade. It all began in 2010. It was myself and Dixon, who's joined us here today as the co-founder of Bank to the Future. We wanted to create a bank that was based upon non-fractional reserves, so you didn't have to lend people's money out. It turned out that's really hard, so we pivoted to a securities business and started funding the companies and tried to build an ecosystem. From that, after I wrote a book called Bank to the Future, I was invited to speak at the first Bitcoin conference in Europe, and that's where I really met the community. It was about 40 people in the room, 20 to 40 people, half anarchists, the other half cryptography geeks, and I believe Bobby might have been there as well, maybe, in Prague. In 2012, some of the work that we did in 2010, in order to allow for investing online, we managed to get the regulators in the UK to update their laws and change so that people could invest online. President Obama saw the work that was done. There was a group of 3 companies that were doing it and signed into law the Jobs Act in 2012, which updated approximately 80 years of securities laws to allow for people to invest online and open up who could invest. So those that were around in those days, they got into some of the companies like Kraken. We got about a 200x return for our investors based upon today's valuation. In 2013, we were added to the regulators register, and this was the first part of that. 2014, we started playing around. So many people are talking about security tokens today. In 2014, we started playing around with how you could use crypto in order to build securities. We launched a fund with a guy called Max Kaiser, who was the first guy to talk about Bitcoin on TV. Our investors receiving thousands of Bitcoins as a result, at a low of about $250 at the time. Some of the highlights were a BitStamp exit. So we were investing in the seed round through this Bitcoin capital. And Kraken went on to become one of our most successful pay-per-value companies. 2015, we got thousands and thousands of Ether for our investors when it was priced at about approximately $1 at the time. We created a security where everyone else was doing like cloud mining and things like that. We structured it as a security, future-proofing, thinking that these things are going to be securities in the future. And thousands of Ether were distributed to our investors as a result. In 2016, we created the first, what I would call a security token. It was a BitFinex. One of the exchanges got hacked, and it was a disastrous situation. 120,000 Bitcoin stolen from the exchange. They launched a token which was debt-based, and we constructed an equity swap that allowed people to use that token in order to purchase equity in BitFinex that went on to recover the exchange and lead to the bull market in 2017 as well. In 2017, we were disrupted by ICOs. None of our investors wanted to invest in equity anymore. They were getting 10x on tokens. No company wanted to issue equity. So we had to construct a process for allowing tokens to be sold in compliance with securities laws, forecasting that these things would be securities in the future. And so we did just that. And so far, with the exception of Telegram, None of the companies that sold tokens through our platform have had regulatory issues as a result. We also did the whole process of filing our Form Ds way back when everyone else was pumping these things. In 2018, we decided to allow people to invest in the largest companies in crypto and created a secondary market where you can buy and sell shares through our structures that are backed by shares in some of the largest companies in crypto. An example is Ripple Labs, now valued at $10 billion. You could currently buy it cheaper than the banks and VCs, the equity, not the token. They own 60% of the tokens, and the value of their tokens is currently more than the book value of the company. In 2019, we made 3 acquisitions preparing for security tokens as the industry started to actually join what we had been doing for about the last 9 years prior to this. We acquired a decentralized exchange that was responsible for the world's first atomic swap between Bitcoin and Ethereum, altcoin.io, in order to switch it to a decentralized yet compliant security token exchange. We acquired an FCA-registered, appointed representative, made a strategic investment. Some of the team are here today with Adam, and also an SEC-registered broker-dealer so that we could put all this together to take everything out of Bank to the Future and allow this compliance to be achieved, combining some of the next trends that I'll talk about. So here's the next 5 minutes on the next decade in crypto securities. So what we're investing in right now, we had several winners. Obviously, Bitcoin was a big winner for us. Crypto exchanges were a big winner for us. Ethereum was a big winner for us and our investors. But what we're looking at right now is the intersection between securities, decentralized finance, and centralized finance. We think this intersection is where the next 10 years are going to create the next bull trend in crypto. Here's what we've learned from that. Now you can have your Bitcoin, you can have your Ethereum. The innovation is happening faster on Ethereum, obviously right now, but now we're starting to get the next wave of being able to do this on Bitcoin, where you can lock them up and receive returns all in a decentralized way. In Ethereum, it's happening a lot faster because it was built for that. And the industry is just growing and growing and growing from strength to strength. This is the next waves of disruption in banking and financial services. Combine that with things like stable coins, and people are going to be able to take out fiat money, put it into crypto market, and it tends to stick. Then you have DeFi, centralized finance. These things are going to come together. Institutions will onboard in a more regulated way through compliant centralized finance, and crypto investors will do it owning their own private key from hardware wallet, Ballet, to your Trezor wallet, or whatever it may be, receiving those returns. Game-changing innovation. Can't wait to see it go further. One thing we've learned over the last 10 years is that people like to keep Bitcoin and use Ethereum. If you want to sum up the last 10 years of innovation in all of this ICO pump and everything that happened, people like to keep Bitcoin, use Ethereum, and there's a lot of speculation and all sorts of things in between in order to try and accumulate more Bitcoin, and then more and more, because of the way that Ethereum was built, DeFi is happening at a really, really fast rate on that. In terms of centralized finance, what we saw, as I said, to talk about some of the big exchanges, the trends that we saw, crypto exchanges, investing in equity in a traditional security, and then securities that give people ways to get Bitcoin. What we've learned over the years is that it's pretty hard to get Bitcoin sometimes, but earning Bitcoin is a really good way, and some of our investors, literally, they were earning lots and lots of Bitcoin through our securities and Ethereum, and they've never looked back. They still got those there. And those are some of the highest returning investments because they earned it. And then once you've got something worth a lot of money, you tend to want to figure out how to use a private, store your private key and go through some of that stuff. So it's this intersection that we're seeing. So what we've learned in the next 10 years is we've played around with some of these things. We played around with centralized finance, compliance. So let's look at this. And what we've seen is that right now, there is a lot of interest in security tokens, but nobody is investing. There's several reasons why nobody is investing in security tokens. The first is everyone's promising liquidity, and guess what? No liquidity. So the promise that they're selling is not actually being fulfilled. The solution to that, in order to drive adoption in security tokens, is how can you create a security that benefits from tokenization but doesn't rely upon the liquidity, and then the liquidity will come. That's what we've been thinking about at Bank to the Future. The other thing is that you need a solution through CeFi. The largest pockets of money, the institutions, are gradually getting in and wanting to be onboarded. The compliance laws are not about to change. The trend of trying to collect more tax, governments wanting to collect more tax, the trend of trying to do anti-money laundering, those are not about to be reversed just because blockchain and crypto exists. So compliance still needs to be done in a centralized way, but we can use RegTech and technology in order to make that process way more seamless. However, once you are compliant and you have centralized compliance solutions, then you can integrate into the DeFi space. So what we're doing, how we're thinking about a Bank to the Future, is we decided that to celebrate our 10-year birthday, as a result of all these acquisitions, we're looking to disrupt ourselves. And so that's what we're looking to rebuild as if we were starting from scratch. And what we've been doing is taking all the compliance solutions that we built over 10 years of taking global securities laws, putting them out into a separate app, so that people can use it when investing in security tokens, other platforms. Crypto exchanges are probably going to want to adjust as the regulations get tougher and tougher and tougher. But then you can have decentralized exchanges plugging this off all together as the DeFi space. So use the best of both in order to do that. Also use the benefits of both Bitcoin and Ethereum. As I said, people want to receive returns. They want to accumulate Bitcoin. But Ethereum is just a lot easier to use, a lot faster to use, and a lot of the developer community are building DeFi at a rapid pace on it. So why don't we just let Bitcoin be that store of value and Ethereum be that protocol for DeFi and use the best of that, and eventually Bitcoin might start introducing solutions, but it was never designed to do that in the first place. So, that's 5 minutes on the last decade, and that's the next decade that we'll be looking at. And I'd just like to end very quickly on 5 minutes on what we're doing next. BFX is the new, essentially taking that vision and giving people the ability to use a decentralized yet compliant security token exchange. We think the industry is thinking about this wrong. We used to have an ATS. We sold that to Coinbase. So that they could enter the security token industry. The reason we did that is because we think the infrastructure from these regulated exchanges of applying for licenses and essentially becoming the New York Stock Exchange in every jurisdiction means that you will never be able to afford the operational cost. Why did crypto grow so fast? It grew so fast because it was in a regulatory arbitrage mode. And then once these exchanges got huge, they could then afford the compliance cost and allow the industry to grow. We think we need to do the same thing in the security token industry. And so the way that we're doing that is through what we've done. We're also launching, this is the very first time today that we're launching, we thought, well, rather than try and persuade all our clients to adjust to security tokens when there's no liquidity in it and they don't see all that, we're just going to do it ourselves. So we're proud to announce that we're going to be launching our security token, which is BFXT. Essentially, it's a decentralized yet compliant securities token exchange, and we have banktothefuture.com, which has been a decade in crypto securities as a centralized solution. We think both are needed. Institutions want to invest new people, want to invest through centralized, and once they learn crypto, they then want to get into decentralized. You need to have both options. And so what we're doing is we're introducing our security token, whereby we're taking all of the revenue that we earn at banktothefuture.com and paying a fixed percentage of it, our centralized solution, to those that own our token. We're then also disrupting ourselves with our decentralized solution and plugging the two together so that people can choose between holding their own private keys or doing it in a centralized way. And all of the revenue earned from the BFX, our decentralized yet compliant security token exchange, will be paid out to those that own our token. The idea is that it's got to be a good investment even if there's not liquidity. So how do you do that? Well, make it convertible into our parent company equity as well so that people can analyze it just like they've been analyzing for decades and decades when analyzing private equity. So the token is not equity itself, because there's so many issues there, but it's convertible into the equity should we exit. It means you get all the upside of our company growth. It means you get all revenue in the meantime from our both centralized solution and decentralized solution. And we think that's the formula for really boosting security tokens. So there's a little diagram of how we're doing it. I've got 1 more minute left, so that's how we're doing. Essentially, we're taking BFX, giving the revenue, a percentage of the revenue to our security token holders, taking banktothefuture.com, giving a percentage of revenue to our token holders, and then any benefits in the equity and the exit, they'll do it. So what we've seen at Bank to the Future is that people are very impatient for returns because private equity takes damn long time. So if we can give them income in the meantime, and some of the securities that did that lead to some of the most happiest investors, happy investors, more liquidity, boost the industry, we think this can spark the next trend in crypto. So here's our 2020 plan. We're going to launch the Bank to the Future token. We're currently on a roadshow with institutional investors. We'll allow our investors through banktothefuture.com to also participate that in later. Immediately, that goes to revenue because we're already a revenue-generating company. We don't need to wait. Then we'll launch the exchange, BFX, so a decentralized yet compliant security token exchange. And we'll try and build liquidity, but that's not the main value proposition. And more happy investors means more liquidity as we can grow. And then we want to repitch all of our clients. We're investors in most of the exchanges across our industry. And if we can prove that this works, we'd like to do it for all of our portfolio companies and as many of them that want to sign up to launching security tokens. This is our plan for boosting it. In terms of next steps, we're on a roadshow at the moment. Kicks off right here in Miami. Thanks for inviting us, Mo. Happy to sponsor. Next week, we're off to New York. We're in San Francisco, Cancun for the Satoshi Roundtable, and then we're kicking off to Asia. So if anyone, institutional investors or wants to have a meeting while we're there, we'd be happy to do that. A couple of things just in terms of next steps while I wrap this up. In terms of our booth over there, do come and say hi. If you are a Bank to the Future investor, I've already seen about 5 or 10 of you come up to me. We'll just check your account. If you've made an investment through our platform, we'll give you a free Ledger wallet. We bought some Bank to the Future branded wallets. We've only got about 50 of those, so just subject to them going out. And here's where you can join our community and be a part of it in the future. So I think I did just over in 15, but thank you for your time.